Welcome to another episode, Focus in Finance. I'm Shirley Luu, your host. You know, some of you saw familiar faces the last couple episodes in the month of February, and I think you saw Dr. Deima here, Elnatour, and I'm always excited to have her. Welcome back.
Thank you so much, Shirley. So good to be here.
Yeah, we always have so much fun here, you know, and I know that, you know, of course, you know her as the Annuity Queen, but not only is she Annuity Queen, guys, she's also Annuity of IUL as well, from the West Coast and the East Coast, and as, you know, working together as partner, it's amazing the kind of education we bring to the forefront. So, welcome back.
Thank you. So good to be here.
Good. So how was your trip here?
It was great.
Good.
Not a hiccup.
Not a hiccup.
Not a hiccup.
So you know, the last time we've been talking to people about having retirement and things like that, the other couple of episodes and the importance of saving and all that. Today I want to bring a kind of different subject, and it has to do with maybe legacy, wealth preservation. You know that, and that as we run across people where they go to work, and typically when I ask them about life insurance and I mean, what do you see is out there when we're talking about life insurance just in general?
Oh my goodness. Some people, Shirley, have a visceral reaction to the idea of life insurance because it somehow reminds them of death.
Yeah.
And I can't. I don't get that. I really don't get it.
Oh, it's a taboo. Taboo in some of the community, the Asian community. That, what, you want me to die? That's why you want to buy life insurance?
Yeah.
So talk about the taboo and all the kind of things.
Definitely. So life insurance is not, it's called life insurance, not death insurance. So that's the very first thing I normally talk to people about is, look, this is for your life. And life insurance had been around, again, in our country since the 1700s. Surprise, surprise. And it continued to evolve over the years. So one of the main reasons why everyone should consider life insurance today is because it has something called living benefits. And living benefits is something that if you get sick, and it doesn't have to be a severe illness. Like we all know people who's had heart attacks, strokes, and they recover and they live another 30, 40 years. Well, if they have the right coverage, the right life insurance policy, did you know, Shirley, that they can accelerate their death benefit and take this money today? And in the IRS code, that's also tax exempt.
So you mean to tell me, if, for example, if someone has a grandma or grandpa or the mom and dad goes into an Alzheimer situation, which Alzheimer, you and I know that it can take a long time before someone passes away. It's not like a quickie 1 or 2 years. This thing can be used?
It can be used. So if you have $1 million coverage on this person, on this parent, and they develop Alzheimer, instead of straining the family financially to take care of them, because we all know that they need help in many aspects of life, if they have $1 million, they can accelerate the death benefit. Depending on the severity of the condition, it can pay anything from 40, 50, 60, 70, 80, up to 90% of the $1 million. They can write you a check for it.
Wow. So it is such an important piece of it, you know, rather than liquidating your money, you're making the insurance company pays for those kind of things. Gosh, you know how many people can really utilize that stuff today?
We really can, and it's so sad because I work with so many young people, and death is not something that happens only as we age. It's unfortunate sometimes that we have cases where people are born with some disorders or some illnesses, and sometimes they develop them, or maybe accidents. You know, if someone is really active, you know, they love to ski or motorbike or whatever the case, accidents do happen. And so when accidents happen, it disrupts their flow in their life and their earnings. So if they have coverage like that, they can definitely have the funds to carry them forward in life and put them in a good state.
So for a young person, living benefit is something that's definitely, they don't see them having it, but I found out somewhere one day that someone said that a lot of young people even need long-term care because of those accidents.
Oh, yes, that's right. And so the long-term care also is available in those plans, and life insurance, you can have that. Some of the plans will even have like a monthly payment, like in case of Alzheimer's disease or things that are a little bit more on the longer side, where it doesn't necessarily terminate the life, but it affects it severely. It can actually make, you know, lifetime payments to the individual for as long as they live. So there's definitely a lot more uses than someone will use it after I pass. There's a lot more uses of these life insurance benefits in your life that you could use it yourself.
But there's also another connotation. Some of the younger people may say, you know what, I'm not married, I don't have kids, I don't have those kind of things. Why do I even need life insurance? Because I'm told to invest somewhere I can make a ton more money. Because to me, I worry
Yes.
about making more money on my return on my
Yes.
investment, and I don't have anyone to leave a legacy for. So how do you combat that?
Oh, I love this because I'm going to tell you a story. Are you ready, Shirley?
I love story. We love story in the show. Yes.
So when I was in my 20s, that's precisely 20s, 30s, I had a financial advisor.
Okay.
But it was more of a traditional approach to financial advising.
Okay.
If you don't have dependents and if you don't have responsibility per se, because I'm not married and I'm single and I don't have children.
Right.
And so she said to me, you don't really need life insurance. What do you need it for? Well, I learned later in life that there's something called living benefits.
Yeah.
I also, as I grew and matured through life, I wanted to do good in the world.
Yeah.
You know, I work with a lot of charities, and so I would like to leave a legacy, whether I have my own children or if I want to do good in the world for other people or my own family, you know, nephews and nieces. I have 8 of them and counting.
Oh my gosh.
And so why wouldn't I want to set the next generation with some funds to help them out? And so if I don't have life insurance, I can't do any of this, right? Or I can do it, but it's going to be a lot more limited because now I can convert less money and get much greater benefit. So to me, it's a no-brainer. So really, the living benefits, I would say, is one of the main reasons why a young person with no dependents would have it. Also because the cost of insurance is so negligible at that age, it's good to have that coverage. So later in life, as you develop a family or you become charitable, like I am, you definitely now have options
So
to
what
get.
kind of return do I get? On my,
Oh my
okay,
goodness.
Okay, so yeah.
So most of us do not hold one policy. We have many, and there's many different amazing products out there.
Yeah.
But generally speaking, on average, these policies will not perform less than 6%.
Wow.
On average. But really, in reality, when you look at all of the policies over the years, 8 to 12% is a very comfortable range.
So I can make that high return inside the life
You
insurance.
certainly can. So there's an investment vehicle that's hidden inside of these policies called a cash value life insurance. So when we talk about life insurance, I like to think of, you know, a map or a chart. There is temporary life insurance, which is term, and there's permanent life insurance. So under permanent life insurance, there is cash value permanent policies, and there is an investment vehicle that exists within them. And the way it works is, say that your cost of insurance was $100, but you pay $200. So 100 would go towards the cost of the insurance that gives you the living benefits, the death benefit, and all of this other stuff. And the $100 gets invested, guess what? In the S&P 500, in the NASDAQ, and other instruments, and it grows. And the beauty about those investments, I can turn around and take that money out anytime for any purpose, and it is not taxable.
You know, I think you had mentioned one time there was a client that needed money, so they took some money out as a loan. They didn't have to pay the taxes, and the interest rate was so low. But yet, when they took the money out, the money was still growing. Can you share a story about that one?
Yes,
Oh my God, I think.
So when the cash value grows in these policies, you could be bringing in, say, $1,000 in interest a month. But then you take that money and you go leverage it somewhere else, and maybe you're paying interest on that, say 5%, to borrow the money against your policy. So maybe that interest is $500, but you're still making $500 in interest while the money is out being deployed to do something else for your life, right?
Wow.
And it's not magic, it's just how these policies work.
So let me get straight. So for that month, if I had an account and it happens to earn $1,500 in interest because of the investment made inside my life insurance IUL, but technically I borrowed some of that money out, even though that money's somewhat not in there, I'm still making money.
Correct. And the reason it works that way, because there's many different ways for you to take the money out of those policies. You can take it as a withdrawal. And if you take it as a withdrawal, you're going to owe taxes on it, and it's no longer in the account being invested. Or you can take a loan against the amount.
Wow.
And the way that works is the insurance company has a general account. They'll give you the money out of their general account while the money is still in your account earning interest.
Wow.
We like to refer to this, I personally love to refer to it as the phantom effect of money. It's no longer there, but it's bringing me money.
I like that. Okay, audience, I'm going to, let me kind of recap, dumb down a little bit here. Okay, so let me get this straight. If I had a life insurance account, specifically the IUL, because term don't get anything, and neither. if I have, let's say, $50,000 in cash value built up over the years,
Correct.
and I needed, like, I don't know, if I decided to buy a brand new car, $40,000, and I'm going to go inside of my policy, take out $40,000
Correct.
from my account. So technically, I only have like $10K left, right? But the money is growing inside of my account. Is it growing on the $10,000? Is it still growing based on $50,000?
Correct.
Right?
You're
It's
collecting
growing.
interest on the 50,000.
Oh my gosh, guys, do you understand what that just happened there? It's kind of like you have the cake and eat it too.
Is
I
it-
know. Someone said you can't have the cake and eat it too.
I hope we didn't blow out too many minds out there, because this is real. This is happening today. It's working. It's working beautifully.
You know, I don't mean to tell you guys this, but if you put that money in investment somewhere else, try that.
So
Can you
let's compare it, right? So
Yeah.
let's compare it. If I take that money, where else do you want to put it so we can do the comparison?
I'm just saying that, I don't know, maybe buy something, which doesn't earn anything,
Or the
right?
stock market, maybe?
Or, a stock market, or how about
Okay.
maybe a home that I'm hoping to appreciate in value. But let's say the stock market.
The stock
mutual fund,
market.
Yeah.
So if I have $50,000 and I put in the stock market, or I take that $50,000 and put it in a cash value life insurance policy, I can borrow the money from my cash life insurance policy, cash value policy, anytime, and I continue to earn interest on it. If it's in the stock market, I have to liquidate those securities,
Yep.
and then I pay taxes on the gain, and then I use
know.
the money, and I'm not earning interest because I already took the money out.
I know, it's so frustrating because, I know a lot of folks out there loves the 401k, the IRA, and all the other stuff out there. But, when you think about it, if your money, imagine this, if I make a deal with you, give me $10,000 to invest, okay? But know that tomorrow, the minute Uncle Sam comes along, they're going to take 3,000 of it away. You only have 7,000. So the money that you're growing outside there in a tax situation, you're making money for somebody else.
It's not protected.
I mean, literally making, and it's just like, anyway, look, audience, I'm going to have Dr. Deima come back many, many more times.
Thank you,
Deima,
Shirley.
you want to share real quick how to get in touch with you?
Sure. So my phone number is 669-888-6925. And Shirley?
It's 703-608-1203. Hey, just reach out to us and we're going to be able to help you. So until the next time, you guys, remember, you rise by uplifting others.